In a market that's just buzzing with hype and noise, there's this one company that just quietly keeps on delivering. Today, we're going to pull back the curtain on Procter and Gamble. Yeah, it's a name you absolutely know, but it might just be the stock you're totally overlooking.
It's really the question on every investor's mind right now, isn't it? With the market swinging all over the place, where on earth do you put your capital to find not just safety, but real, reliable growth?
Well, what if I told you the answer isn't some high-flying tech startup? What if it's been hiding in plain sight this whole time, right there in your bathroom cabinet or your laundry room? Yep, we're talking about P&G.
Okay, so let's set the stage here. For anyone who's in it for the long haul, the real mission is to find that steady, compounding growth that can, handle whatever the market throws at it.
And let's be real, you're facing a ton of headwinds. The market's volatile, inflation just won't seem to quit, and sometimes it feels like a win just to preserve the capital you have. This is exactly the kind of environment where these super defensive companies are really built to shine.
So, what is P&G's secret weapon? How do they stay so resilient? It all comes down to this incredibly powerful defense that we call an economic moat. Now, if you're not familiar with the term, just think of it this way. An economic moat is a special, sustainable advantage that keeps all the competitors at a distance. It's the reason a company can protect its profits year after year, decade after decade. And P&G's moat? Oh, it's like a fortress. It starts with these iconic brands that are practically part of our culture. Tide, Pampers, Gillette. These aren't things you buy once. They are daily use products that people buy again and again without even thinking about it. Then you layer on their massive global scale, a supply chain that's just ridiculously efficient, and the fact that they own more than a quarter of the market in so many categories, you've got a business that is incredibly hard to compete with. All right, let's shift gears to what might be the most compelling part of the P&G story for many investors. Its absolutely legendary dividend. Just take a second to look at that number. 70. For 70 consecutive years, Procter & Gamble has not only paid a dividend, they've increased it. That puts them in a super exclusive club known as the Dividend Kings. It's just incredible consistency. And think about what's happened during those 70 years. P&G kept raising its dividend through Cold War tensions, through the crazy high inflation of the 80s, the dot-com bubble bursting, the 2008 global financial crisis, and yes, even through a global pandemic. I mean, that speaks volumes about the sheer resilience of this business. And the dividend today? It's as healthy as ever. We're looking at a solid yield, and the payout ratio is sitting in a really comfortable spot around 60%. That means they have plenty of cash left over after paying you. Oh, and get this, they plan on returning about $15 billion, with a B, dollars to shareholders just this year through dividends and buybacks. That is a serious commitment to shareholder returns. Okay, so a great history is one thing, but as an investor, you've got to ask, what about the future? So let's dig into P&G's growth prospects and see if it's actually a good value right now. Now, this right here, this is a really promising sign. After getting squeezed for a while, P&G's sales volume actually grew by 2% last quarter. Now, 2% might not sound like a huge number, but it's the first time volume has gone up in a year. It tells us that customers are coming back and demand is getting back on its feet. For investors, that's a huge green flag. So what's the game plan to keep this momentum going? Well, management has a pretty clear four-part strategy. First, innovation is key. They're launching cool new products like Tide Evo. Second, they're pushing into new markets that have higher growth potential. Third, they're focused on making sure that volume recovery continues. And finally, they're using the power of their brands to be smart about pricing. It's just a solid, repeatable plan for growth. So, the big question, is it a good time to buy? Well, if you look at the valuation, it's definitely looking attractive. The stock's trading around 20 times its forward earnings right now. And that's quite a bit cheaper than its 5-year average, which is closer to 24. So that discount could signal a really compelling entry point for such a high-quality company. And it seems like Wall Street analysts are seeing the same thing. You can see from this chart of their price targets that, on average, they see some pretty solid upside from where the stock is today. That really backs up the idea that there might be good value here. But of course, every investment has its risks, right? No free lunches. So to be balanced, we have to take an honest look at the challenges P&G is up against.
So the headwinds are pretty familiar, but they're real. You've got cost inflation, raw materials getting more expensive can definitely squeeze profits, but P&G's huge size gives it massive leverage to negotiate better deals than its smaller rivals. Then there's the risk that people might switch to cheaper store brands when money is tight. P&G fights this by constantly innovating and basically reminding us why we trust brands like Tide in the first place. And yeah, there's always fierce competition and global uncertainty. But honestly, P&G has been successfully navigating these exact same challenges for over 100 years.
All right, let's tie this all together. When you put all the pieces on the table, what's the final verdict for someone who's looking for stability, income, and long-term growth?
I think this quote just nails it. P&G is all about quality at a reasonable price. This isn't a stock that's going to double overnight. It's about aiming for solid, reliable, annualized returns of somewhere in that 8 to 12% range over the long haul. So let's do a lightning round recap. What do you get with P&G? You get a defensive moat that's almost unshakable. You get reliable, growing dividend income. You get slow but steady compounding growth. You get it at an attractive valuation right now. And you get a stock that can act like a stabilizing anchor or ballast for your entire portfolio. Look, P&G isn't exciting. It isn't flashy. And that right there is its greatest strength. In a world obsessed with hype, consistency is the real king. So the last question is really one for you to think about. Is a true bedrock company like this the right foundation to build your financial future on?